Hey traders, welcome to this week's Forex Focus. I hope you are all doing well and you've all had a good week in the markets. Certainly there's been a lot of volatility there. There's been a lot of movement, not necessarily just in one direction, which has made things a little bit more challenging to trade. But we're going to talk about that in this week's Forex Focus and how you can position yourself for the week ahead and the opportunities that you want to be looking out for. Apologies for the fact that we've been away for the last couple of weeks, but Nick and I have been away on business setting up things with the new fund, which is super exciting. But then at the same time, it has meant that I haven't been able to put these videos out there for you. So apologies for that. But we're back in the saddle now, and hopefully I can give you a ton of value. And as I said before, really show you what it is that you need to be looking at for the markets for the week ahead. So with that being said, let's dive straight in. So the markets at the moment, they're very, very unpredictable, even more so than the previous months. You know, all of this stuff to do with the trade tariffs and the trade war going on at the moment, and the sort of like the seesawing in the different stances is really making it a difficult arena to be able to generate profits in all markets, not just the currency markets, but the stock markets as well. Because on the one hand, it looks like everything's going to sell off, and then it seems like actually the market's going to get a little bit of respite, and we're going to see a bit of a recovery, and then they sell off again. And then, you know, most recently this weekend, Trump has announced that he's going to be given an exemption on all electronic goods coming into the US, which I think if you look at things like the crypto markets, which are a little bit of a proxy for risk, it looks like the markets do like that, which means that when they open up on Monday, we're probably going to see some stock market rally. We could potentially see a little bit of a recovery in the US dollar, because the US dollar has been sold quite a bit in the previous week. So we might see a little bit of a recovery there. But what I will say is that from our own personal trading and investment perspective, we're not looking super long term. So we understand that things are going to potentially change, you know, in a split second. So from that perspective, the idea isn't to build into positions that you're looking to hold over a period of days, weeks, or even months, but actually it's to get in and get out very quickly, or as quick as possible. Obviously, we can't force the markets to do what we want them to do. We can't bend them to our will, so to speak. But we can adopt a strategy that's going to put us in the best position to be able to generate profits, even in these sorts of uncertain times, okay? Now, the way that we are going to be trading is, as I said, we're not taking so much of a fundamental view. We're looking more at the sentiment. And from that perspective, we're going to be trading more from the chart perspective. So we'll be looking at the technicals, and we'll be putting a lot more weight on the technicals than we ordinarily would do. So usually when we're looking at the markets, we will look at the technicals, but they're sort of secondary. We look at the technicals and we say, well, we're going to use those for entries to kind of fine tune where it is that we want to get into the market and get out of the markets. But we'll use the fundamentals to give us our bigger picture. But in this particular instance here, we're going to be really sort of using the technicals to drive all of our decision making. So we'll be looking at the big levels. We'll be looking at the general direction of the markets from a technical perspective and making our trading decisions based on that. So with that being said, let's start off by looking at the Aussie dollar. So the Aussie dollar has been selling off, as you can see here. The Aussie rallied going for the last few days of last week, obviously. And we can see that it is now rallying into an area of previous support, which could become resistance. Now, we're not going to say that we're waiting for this exact area here. So it's 100 pips above where the markets are right now. As I said earlier, the fact that Trump has put some exemptions on electronic goods coming into the US could mean, and if we look at the crypto markets, that actually the US dollar might get a little bit of love going into at least the early parts of this week. So from that perspective, I am going to be looking for some dollar strength. Now, understand that these are uncertain times. So even though I'm saying this, if you're somebody that's not as comfortable taking on risk and, you know, understanding that your win rate is probably going to be less for the coming weeks and potentially even months, then this is something that you probably should just stay on the sidelines. However, if you're willing to take a little bit less of a win rate, but understand that there are still opportunities out there for you, then these are things that you can look at. So looking at the daily chart, we can see that we've got a big sort of price zone that the market is interacting with at the moment. What I would be looking to do is looking to trade a bounce from this level here. So if the market reaches up towards that level, then I'd have an immediate sell in there. My stop loss, as you all know, is always 2 times the ATR. So we've got 0.0075 in there, so 75 pip ATR, which would make that a 150 pip stop if you took this from the daily perspective. Of course, the thing with taking it from the daily perspective is that you're potentially going to be holding that trade for a little bit longer. So you could look at it from the 4-hour perspective where the ATR is at 48 pips. So 2 times that will be 100. But one of the things I said to my community this week is that we might want to give the market a little bit more room to breathe because it is a little bit more jittery, which means there's more volatility there. So actually either going to like a 2.5 times to 1 on the ATR here, which will pretty much put you where you are with the daily here. So actually having a wider stop might not be such a bad thing to do. So if we take a look in here, if the market rallies up into this level, 150 pip stop, put your stop somewhere around there. And then in terms of where do you take profit? Well, you're not looking for a big market movement in order for you to be able to take profits. A very, very small market movement here, just a bit of a reaction. And that's what we look for, is big reactions to small levels. If we take a look at that there, then the market doesn't need to do very much in order for us to be able to take our profits, which is exactly what we want in the current climate. If we move on to the euro dollar, so the euro dollar here has rallied away from this previous level of support, which is one that we identified when we looked at trading. As you can see, it rallied in the last part of last week, so Thursday and Friday, but Friday it did come off quite a bit. Now, because of how far this market has gone, I think things like the euro and the pound probably will be very good candidates to sell into off the back of the news that's come out this weekend. So if the US dollar does start to get a little bit more love and a little bit more support, then I can see that the markets will pull back towards this area here. So we'd look for a sell-off in the euro dollar going into the early part of next week rather. And then as the market comes down to the 1.0760, I would look again to be buying from this area here unless there's a material change in the markets, which I don't think there is. Obviously, there's been some exemptions there from Trump's perspective, and that's not to do with necessarily a change of stance from his perspective, but more that he's just looking and worried about what's going on with the bond markets at the moment. So if they kind of settle, then you can see that he might apply the pressure again on the road that he was already going down. So that's why I say that we will see, or potentially we'll see, an initial sell-off here. And then as we get down towards a support level at 1.0763, that's where I would look to start becoming a buyer again, unless, like I said, there's a material change in the markets. The pound dollar, very, very similar to the euro dollar. So we've had the rally here. I think that where we're at the moment, we could see a sell-off, but I think that there's probably a better opportunity from the euro's perspective in that it's gone a longer way, so it's gone further, it's got further to fall, and also from the Aussie dollar perspective in the sense that the Aussie was already fairly weak. So the pound dollar, I think, is less clear, if you want to trade that. So I wouldn't necessarily sell directly into this, but if we do get the sell-off, I would look to start buying again somewhere around 1.2710. Moving on to the New Zealand dollar, very, very similar to the Aussie dollar. So we did get that rally at the end of the week, but overall the New Zealand dollar is pretty weak. So from that perspective, I think if we're looking for a sell opportunity, this might be one of the most immediate ones over here. If the market, you could even trade it at the market open if you don't get too much of a gap. But if you were to get a gap and then the market closes out a little bit, we could look to trade from around 0.5847 on an immediate bounce there down towards the lows 0.55. But obviously we don't want to trade that low. We will be looking at the ATR to drive what our profit targets are. So we're going in there to be very, very quick in and out, so 1-to-1. So from that perspective, saying what I was saying earlier, allowing for the additional volatility, you'd go to the daily ATR 0.0067, which would probably put you around a 135 to 140 pip stop loss. If we put that in here, so you take a look at exactly where that is, 140 pips pushes you up there. So you've got quite a way to go on the upside. And then, as you can see, the sell-off, it doesn't take you even down towards the previous low. So it's a very conservative profit target and a conservative stop loss as well, which is obviously what we want to see. The dollar CAD here has sold off a lot. We've been saying that we've just been looking to sell into this, but again, we're looking for a little bit of a market rally going into the early part of next week. We need to keep our eyes on this downward sloping trend line. So as the market moves up, rallies into that trend line, that's where you'd be looking to get in there on a sell trade, unless the market breaks through there, which I think it's unlikely that it does. But if it does and you get a close above there, then you can start looking for trades to the upside. So buying through this and really sort of applying pressure to that, to the dollar rally. If we look at the dollar franc, so this is the dollar franc, and this is what I was talking to my community about this week. We're going back to that time in sort of like 2008, 2009, the big financial crisis, when you've got the markets aren't trading according to fundamentals, they're trading according to risk sentiment. And one of the safe haven currencies at the moment, really, and even more so than going back to the great financial crisis, is going to be things like the Swiss franc and the Japanese yen. And you can really see that here. So it is a massive proxy for risk. Now, what we're going to be looking at here is essentially if the market does, if the market does open up, the stock markets, they open up on Monday, then I would imagine that we would see a bit of a rally in this particular pair here. But I don't think that all of the fear is out of the market. Consumer sentiment came in last week and it was very, very negative. So from that perspective, I think that there's a good opportunity here. You don't necessarily need to get in on this initial rally, but you can look at these areas here, so 0.8618 and 0.88 as being good areas to look to start to sell from. So as the market rallies up into that area, you would look to put in a sell trade there to essentially take a view on the fact that the markets aren't out of the woods yet and there's still going to be some risk coming to the market. So there'll be some very good opportunities there. Finally, if we take a look at the dollar yen, so the dollar yen, we can move this down a little bit now. The dollar yen has sold off. It's moving quite harmonically. I would imagine that if we do get a bit of a rally, we need to be looking at 148.87 as being the first area to sell from. And if the market gets out above there, then we want to have an eye on 151.15 as being the other area to sell. This, like the dollar franc, I think is going to be one of those pairs and one of the more straightforward trades that we can be taking in the coming weeks as the markets focus on, is it a risk-off environment, is it a risk-on environment? That will be reflected in these two pairs here. Okay, so I hope that makes sense to you all. I hope that's helped. If you have any questions, please feel free to post it beneath the video. Otherwise, have a fantastic week in the markets, and I look forward to speaking to you on next week's Forex Focus. Take care now, and I'll speak to you all soon.